morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast coming from Princeton, New Jersey. Today is Friday, October 16th, 2009. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. In Mexico City, it's 10:30 a.m. If you do need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have a little bit of a bombshell story that came in just a short while ago. In court papers filed in front of the bankruptcy judge in New York City on Wednesday, this information just came out this morning. Lehman Brothers indicated that it has paid its lawyers and financial advisors about $403 million. This is since September of 2008 when the firm went into bankruptcy. In papers filed with the U.S. Bankruptcy Court in Manhattan Wednesday, Lehman detailed the fees paid to its lawyers and advisors working on the bankruptcy case. All told, 23 law firms, financial advisors, investment banks, and consulting firms were paid $402.9 million in fees and expenses, reimbursements through September of this year. Alvarez and Marsal, the wind-up firm, the rehab firm that's winding down Lehman's operations, was paid about $170 million in the one-year period. In July, the turnaround firm said that it had about 175 full-time employees working on the wind-down. That would come down to about $1 million a person. Weil, Gotshals and Manges, Lehman's bankruptcy law firm, racked up about $98.6 million in fees and expenses. The lead attorney for Weil, named Harvey Miller, is charging Lehman $950 per hour. The law firm representing Lehman's unsecured creditors, Milbank Tweed, was paid about $29 million. The committee's financial advisor, FTI Consulting, took in about $13.5 million. These professionals working to unwind the Lehman derivatives have managed to bring in about $9 billion since Lehman sought bankruptcy protection last year. According to court papers filed back in the summer, Lehman's U.S. units were at that time sitting on more than $12 billion. This is up from about $3.5 billion when it filed for bankruptcy the previous September. So that's $3.5 billion is a pretty good production for having spent $409 million, but that figure is going to get a lot of attention. If you're a Lehman employee who has been bounced out of a job because of your firm's bankruptcy and you read that, that's going to attract your attention. Now to our main news. Brit Insurance is in the news. Two senior executives have left the company in the aftermath of a giant Italian medical malpractice case. Reinsurance Magazine is reporting that Kevin Hutley, Chief Underwriting Officer at Brit Global Markets, and Jenny Martin, Divisional Underwriting Legal and Professional Head at Brit Insurance, have both left the company. It is not known when they left. Sources are indicating that they left in the aftermath of Italian medical malpractice losses. According to sources, Brit has since stopped writing Italian medical mal business. It's not known how much the division lost as a result of the medical malpractice business. Brit has declined to comment. Both Hutley and Martin worked in Brit's Global Markets Group, headed by Matthew Wilson. Matthew Wilson took up the position of CEO of Brit back in April of 2008. Dutch financial giant ING is selling its U.S. group reinsurance business to Reinsurance Group of America out in St. Louis. Terms of the deal were not disclosed. ING said that the transaction would have a limited positive impact on 2010 earnings. The deal is structured as a reinsurance agreement between RGA and ING. It's expected to release nearly 100 million euros in capital and improve the debt-equity ratio of ING Insurance by about 60 basis points. After the agreement, ING will continue to retain a reinsurance portfolio in the U.S. that's been in runoff since 2002. The deal is subject to regulatory approvals and should close in the first quarter of 2010. Well, unlike ING, AIG will not see a profit on their books in connection with the sale of their stake of Nanshan. It was revealed today that the insurer will post a fourth quarter after-tax charge of $1.4 billion in connection with this week's agreement to sell its 97.5% stake in the Taiwanese life insurance company Nanshan Life to the Primus Financial and China Strategic Holdings. AIG said that the sale would probably qualify for, quote, held for sale accounting, prompting the fourth quarter charge. So the gap represents the difference between the sale price and the value previously assigned to the subsidiary in AIG's books. The $2.15 billion sale of Nanshan Life will mark AIG's largest single asset sale to date. Presumably, it still means that cash will be coming in to help repay the $83 billion in loans taken from the government. The MGIC Investment Corporation, the Mortgage Guarantee Insurance Corporation of America, the largest U.S. mortgage insurer, reported its 9th straight quarterly loss after a record number of homeowners failed to pay mortgage payments. MGI's third quarter net loss quadrupled to over $515 million from $115 million the year before. The company based in Milwaukee lost about $4.44 a share, missed the average loss estimate by analysts, which was $1.74. Really missed it. The insurer's run of losses now total about $3 billion. They continue to go up as U.S. unemployment hit a 26-year high. Home foreclosures have reached a record. Analysts are saying that the delinquencies on prime loan, those the least risky borrowers, quote, are really beginning to accelerate now if you look across the mortgage market. Unemployment continues to go up. That's what's driving it. And in fact, as we came on, the Miami Herald from Florida came out with a report saying that the unemployment rate in the state of Florida during the month of September has now reached 11%. The Japanese have acted on BNP Paribas, France's biggest bank. They accused the bank of breaching 2 securities rules. Japan's Securities and Exchange Surveillance Commission has ordered the bank to improve compliance in Japan. Back in November, the bank admitted that they made mistakes and omissions in documentation it was told to file during the Financial Service Agency's inspection. The bank said today, we take the Japanese regulators' recommendations seriously. They'd better. The regulators said that buy orders placed by a BNP trader in Tokyo in November of last year breached security rules. The orders for the undisclosed stock constituted an artificial market making, according to the Japanese regulator. The bank was ordered to improve compliance last year after selling sales of real estate developer Urban Corporation while aware of a swap agreement that was not revealed to investors. Back in 2002, the bank received a 10-day trading ban after conducting artificial trades of an unidentified stock in violation of securities rules so that brokerage could redeem exchangeable bonds with shares it owned. Stock market's down about 95 points. One of the ads we're going to run today is a public service ad. It's aimed at our friends in Pakistan. We'll go to those messages now.